So chapter 8 part J, question number 40th, which is the continuation of the question number 39. According to generally accepted accounting principle, at the time of the purchase, the value of the building, so highlight the word the value of the building, in the question above should be recorded on Fannie Mac Limited's balance sheet as. So what was that? 225 minus 100,000, the value of the land is 125. So answer number 1. Then we go to the question number 41. A company pays 97,835 for an asset. So highlight 97,835, on which the Income Tax Act allows capital cost allowance at 5% per year. The asset is expected to have a useful life, not like life, for 25 years. So highlight 25 years. And will have no salvage value. So highlight no salvage value. Calculate the depreciation expense. So highlight the word depreciation expense for accounting purposes for the asset's third year. So highlight the word third year. If the accountant chooses to use straight line depreciation. So what are you going to do now? So what's the cost of the building? 97,835. What is the salvage value? 0. Minus 0. Divided by how many years? 25. So what do you find? 39,13. Yes. And then if you go to the next sum, question number 42. Company has just bought a truck for 22,500. So highlight 22,500. That's the cost. It's expected that truck can be sold for $3,000. So highlight $3,000 is the salvage value, and the time is 15 years. So highlight 15 years. The current market value of vehicle is 27,000. Using the straight method, what is the annual depreciation expense? So highlight the word depreciation expense. So what do you find? 22,500 minus 3,000 divided by 15. So it's 1,300. It's number 1. And then you go to the question number 46. Same kind of question, but a little bit tricky. Arco Architect recently purchased 19,000 worth of new office furniture, but with their quantity discount, the final cost was only, so highlight 70. So don't do the 90. Read the complete, right? It is expected that the furniture can be sold at the end of its 10-year life. So highlight 10 years is the life, and highlight $1,500 is the salvage value. So find the depreciation expense. Same question. So what do you do now? 17,100 minus 1,500 divided by 10. So what do you find?
1560.
So 1,560. So answer number 2. And then again the question number 47. Exactly. So like 41, I think, right? Right? Yeah. Only difference is 97,635. There it was 97,835. Highlight 97,635. Highlight the second line 25 years. Highlight the third line no salvage value. Right? So 97,635 minus 0 divided by 25. So what's the answer? 3905. So it's number 4. And then we go to the question number, which one is next? 49. Yes. So we go to the question number 49. Speedy Driving School Limited owns a car which they bought 3 years ago. So highlight the word 3 years ago. Okay? 49. So we are on 49. Just 1 second. And then at the time of purchase, the life of the car was expected to be 10 years. So highlight 10 years. Which it would have a salvage value of 2,000. So highlight the $2,000. And then if the annual depreciation expense is $1,800, so highlight $1,800. What is the book value? So highlight the book value. So highlight book value and circle it. So what they are asking for book value? What's the formula for book value? Cost minus a depreciation. But do we know the cost? No, we don't know the cost. So what do we need to do? We have to reverse the formula, right? First we have to find the cost. So now, so 10 years ago, what was the salvage value? 2000, right? And so what do we do? No, 1800. 1800 was the depreciation expense, right? So what do we do now?
1810.
1800 multiply 10 is 18,000.
Then we add 2.
So write down 1800 multiply 10, 10 years. So we find the cost, right? It's not a cost yet. 18,000 plus salvage value plus 2,000. So what's the cost of the car now?
20,000.
20,000. So write down 1800 multiply 10 years plus 2,000, which is salvage value, right? So we find the cost of the car now, which is 20,000. So now we use the formula again. So cost minus a depreciation. So what's the cost is 20,000. At how many years? 3 years. If you read the sum in the beginning, it says, right, 3 years ago, first line highlight, right, and circle it. 3 years ago, right? So what we do now? 20,000 minus 1800 multiply 3 is 5400, right? So 20,000 minus 5400 equal to 14,600. Do you understand? And